we can navigate this environment to make a profitable investment. So today I have the singular honor and privilege to introduce our speakers. Speaking to us today is a man of vast knowledge and expertise, the Chief Operating Officer of GTI Group, in person of Mr. Kendi Hassan. Also, we'll be having the Managing Director of GTI Securities, in person of Mr. Thompson Okafor. And the last but not the least is a man with a knack for in-depth market analysis, in person of Mr. Bano Olaide. At this point, I'd like to welcome each and every one of us to drop our questions in the chat box as the presentation is going on, as all questions will be addressed at the end of the presentation. So without further ado, I'd like to make welcome the very first speaker for today, in person of Mr. Bano Olaide. Okay, so while we wait for speaker to come up, I'd like to believe that each and every one of us is ready to listen to what our speakers have to say. It's actually a very interesting topic, I must say, and I, for one, is looking forward to hearing some very interesting facts, because the investment climate in Nigeria right now is something that we all really need to talk about, and knowing how to navigate it is even much more important. I'm sure a lot of us, we all want to make profitable investments. I mean, there is nobody who doesn't want to make a profitable investment. And that's why we are, having this presentation today. And so we'd like for each and every one of us to sit back. Please ask your questions. Just drop them in the chat box. All questions will be addressed at the end of the presentation. So we await for our first speaker to come up.
Thank you, Abisola, for the introduction. I hope everyone can hear me.
Yes, please.
Thank you very much. My name is Bano Olaide, as Abisola said. I'm presenting to you the Nigeria Macroeconomic Review, the present realities and investment prospects. And going straight to the presentation itself, we have the content where we are going to talk about the Nigeria early exit from recession based on the data that came out in Q1 2021, the investment inflow, the consumer price indicator, and the unemployment rate, the monetary policy environment also. We are going to have all what has happened in the Nigeria economy in a few minutes now. Going straight to the early exit from recession, we all know that, okay, Nigeria GDP rose by 0.11% in Q4 2020. That was the last GDP report that came out in 2021. So this increase in the GDP is an early exit. I will call it an early exit from recession, apart from the other recession that came up that we experienced in 2015. And based on this increase in GDP, what are the consequences? Well, what are the impact? What are the influence for this GDP rise? And the GDP rise here came out from the two successive decline in Q2 and Q3 of 2020. The Q2 2020 declined by 0.61% following the COVID-19 pandemic, the lockdown, and every form of restriction that declined the Nigeria economy in 2020, in Q2 2020, and also in Q3. So in analyzed basis, the Q4 2020, I mean the Nigeria GDP in 2020 at large contracted by 1.92%, and this decline is still better compared to the World Bank and the IMF analyzed project of 4.1% and 3.2% respectively. And what are the contribution to the increase, to the expansion in the GDP for Q4 2020? Apart from the two major components, the oil and the non-oil sector here, are the major component of the GDP. The non-oil sector, the component there, is the only one that contributed positively to the growth, while the oil sector contracted, was unable to have impact on the growth. Despite that, Nigeria actually did perfectly well in terms of the non-oil sector, apart from the oil sector, a way of economic diversification away from the oil sector. And this is like this, I would say this is a good thing for Nigeria in terms of that. And also in the sectoral aspect of it, the Nigeria GDP, in the sectoral aspect of the Nigeria GDP, the agri services, the industrial services, and also the service sector itself. Out of these three sectors, only the agricultural sector posted positive return, positive expansion in Q4 2020 from 26.09% to 26.21%. Away from that, the service sector and industrial sector contracted in Q4 2020. And out of this, what are the subsectors that are advanced that contributed to this expansion in Q4 2020? As we all know, in this 2020, the health sector were most actively involved in terms of combating the COVID-19 pandemic. That's why the health sector have the expansion of 3.0% in Q4 2020, and for the full year have an expansion of 2.2%. While the broadcasting also have an expansion in Q4 2020. The telecom services also, that was when this issue of internet meeting, virtual meeting, everything like that involved data subscription, phone call, everything like that. And the same way with the broadcasting were updating the Nigeria about the update on the COVID-19 issue. Where is the current situation? What is the next news? What is the next things to put in place by the federal government, either by restriction of movement or something? So why this COVID-19 also have negative effects on the other sectors, like other sectors like the housing sectors, like the education sectors, insurance sectors, the accommodation. That was when the issue of no party, no meeting, or that was when the hotels were actually locked down. So the accommodation aspect of it, the hotels contracted by 15.0% in Q4, while for the full year contracted by 17.8%. Also for the education sector, it was during the 2020 when the ASUU was on strike. Schools, primary school, all schools, majority of them were under lockdown. They were unable to open for business. So the education sector in Nigeria declined by 11.4% in Q4, while for the whole 2020 contracted by 13.6%. The effect of COVID-19 pandemic have negative impact on Nigeria education, and even till now, the ASUU are still on strike. And that is that for the Nigeria exit from recession. And again, we have the investment inflow into Nigeria into 2020. The data that came out, the total investment inflow declined by 59.6% to $9.68 billion in 2020 from $23.9 billion that was posted in 2019. And as a result, what is the reason for this? The reason for this is because of the Nigeria weakness in the Naira weakness in the exchange rate, and also the uncertainty in the Nigeria economy in 2020 as a result of the COVID-19 pandemic. So there was much capital flight in Nigeria, where the foreign portfolio investment also declined by 68.61%. And this has been the most dominated capital inflow into Nigeria since Q2. But in 2020, declined by 68.61% compared to what we have in 2019, that's $16.36 billion for 2019. And for the foreign portfolio investment, the decline was across the segment, the equity, the bond, and the money market. They all contracted. The only expansion we had for the investment inflow in Nigeria was for the foreign direct investment that rose by 10.12%. And as I've said, what impacted to this was because of the exchange Naira, the foreign exchange of the naira in the market, and also the inability of the CBN to defend the exchange rate adequately. So these are the reason why we have much of capital flight in Nigeria in 2019. And also in the consumer price indicator, price index, in 2020, the headline inflation, in December 20, the headline inflation stood at 15.75%. But as at the March, the report that came out last week said that the Nigeria inflation is now at 18.17%. And this is, as of January, it rose to 16.47%, while in February, it was 17.33%. It has been increasing, and this increase has been consistent in the past for 19 months. And the increase we have now, the 18.17% we have in the inflation rate, is the highest in 4 years. It has been the highest in 4 years. And the two major components of this inflation rate, the all items less farm produce, and also the farm produce items are also be increasing over the past few months. The increase in the food inflation are to the highest in 16 years. That is in 2005 October. That was the highest food inflation we've seen, apart from what we are having now for March 2021 to 22.95%. And this has been not because of anything. The cases of insecurities in Nigeria, especially the region with the food basket of the nation, the northern part of the nation, has been the one that produce much of what we eat in Nigeria. So the crisis over there, the insecurities over there, have actually stopped many farmers going to farm. And another impact of this is the high cost of transportation. We all know that the price of crude oil has been increasing in the market. Though this NNPC is saying that they are still maintaining the subsidy that Nigeria is still buying at the regulated price of 160 naira. But majority of these marketers are still increasing their pump price. And also the energy tariff, which has stopped so many producers from working. I remember when someone posted on his social media account that he was billed about 350 naira in a month for electricity. I wonder what she was using at home. And another report that came out was the unemployment rate, when Nigeria rose in Q2 27.1%, the unemployment rate 27.1% in Q2 2020 to 33.33%. And this is very high. Though the labor force as at Q2 2020 was 80.29 million as at Q2 2020, but declined in Q4 2020 to 69.68 million. That is, those who are ready to work and they are new, they decline to 69.68 million. But the unemployment rate itself, those who are ready to work but they are not having the work, they are not free and they are not employed, rose to 23.18 million in Q4 2020. And that is the percentage increase there, the 33.3%. And of the age group, address all the age group, 15 to 24, 24 to 30, 25 to 24, 35 to 44, all across age group, all the unemployment rates rose significantly to them. And in the education aspect of it, only for those who had BSc, the BA and the HND declined a little bit, while and those of the PhD declined significantly, while other unemployed people who have the education qualification rose. That is, and this is the impact of this COVID-19, where so many people are being forced to stop their work, even those who have especially those who have the vocational training. Many of them, because of the lockdown, they are being forced. Their business is no longer running as expected, as planned, as even before. They are more impacted with the COVID-19 pandemic here. And if you look at the inflation which we have had 18.17%, and the Nigerian unemployment rate 33.3%. Nigeria Ministry Index, going by the Arthur Hawkins formula here, that is by adding the unemployment rate and the inflation rate, Nigeria Ministry Index is now at 51.47%. And compared with other African countries which we are having here, the Ghana, South Africa, Kenya, Egypt, and Rwanda, Nigeria is the most miserable country among them now. And based on this, and based on the Ministry Index by John Hopkins, Nigeria is still the most miserable in the despite the fact that we say the Nigeria GDP expanded by 0.11%. But by going by the lending rate again, ease of doing the mode of doing business, the lending to borrow money to do business is very high compared to other countries we have where Nigeria have 28.30%. This is very high. And which brings the Ministry Index going by the John Hopkins to 79.66% against other countries where we have Egypt and even Rwanda 39.65%, and Egypt we have the lowest among them here 18.90%. And in the course of the period, the CBN also had meetings they had a meeting in January and March 2021. And going by the conclusion of the meeting, the MPC decided to hold the NPR to 11.5% respectively, and where other parameters also were held, that is the asymmetric corridor, the cash, the CRR, and the liquidity ratio. The liquidity ratio still stands at 30%. And the reason for this hold, despite the increase in the inflation, is that the CBN said they want the economy to sustain the recovery which we have had. So hopefully, if by the time the GDP of Q1 2020 come out, then going by that, seeing the results of that hold in the NPR, we expect that the CBN may possibly shift their hold from on the NPR. And also the other commodities which Nigeria depend on, the oil in particular, the burning lights in January rose by 7.59%. The burning lights for the Nigeria oil, then while the Brent oil price rose by 7.87% to $55.25 per barrel. And if you look at that, that was when the Nigeria foreign reserve also rose by 2.63%. Despite that, Nigeria is still produces 1.36 billion barrels per day. Despite that, as a result of the oil price increase, Nigeria was still able to maintain a higher increasing foreign reserve. While in February, the oil price declined and the foreign reserve declined, coupled with the fact that the container ship which was blocked at the Suez Canal, that around the Mediterranean Sea, where many oil containers were blocked, which gave a little bit increase in oil price during that period. And also the oil inventory recovery. I mean the low US oil inventory recovery in January that causes the increase in January. And in aggregate, the oil price year to date, as at quarter to date, the Nigeria foreign reserve has declined by 1.55%. And this is not because of anything, but the low rollout of vaccine in Europe and the new pandemic curves that the likes of Egypt that has been placing lockdown over the period has slowed the global economic recovery, and that is the reason why the oil price has been declining over the period. And going by the foreign exchange, the Nigeria has declined, except in March, where the IRE window rose a little marginally by 0.39%. And this is not because of anything, but the CBN also has decided not to intervene in the we go to the equity market. The equity markets in January continued the last year bullish sentiment in January by gaining 5.32%, while in February, immediately the February open, the market has been declining. But as we speak now, the month to date, that is for the month of April, the market has been gaining 0.21% to date for the month of April. But for the year to date, the market is still declining 2.84%. And this is the sectoral changes over the last quarter. Then we have in January, the insurance sector has the highest positive growth, while by the oil and gas sector, the banking, and so on like that. But in February, we also look at the sharp decline in the market was caused majorly by the insurance sector, coupled with the industrial sector, the consumer goods, and so on. Then we have the Q1 best performing stocks, the likes of Lasaco, the Champion Brewery, the Guinness, the Stanbic IBTC, UACN, among others there. Then the worst performing sector, the fourth performing stock in the market so far, we have the ETI, the UBA. The decline in the UBA is expected to be as a result of that. I would say the ridiculous dividend that was declared by the UBA, though they have a very strong, reasonable backup to it. Okay, they want to sustain their recovery as a result of the COVID-19 pandemic. And also going by the fixed income market, the fixed income market has been the bullish market in Q1 2021. Despite that, okay, and it's not because of anything. The government said okay, they want to increase the borrowing. They want more borrowing in order to support the 2021 budget. So there will be more borrowing coming out from the government, and as a result of this, governments want someone who wants to borrow by all means definitely is ready to pass with high yield. So that's the reason why the yield is going up here, and coupled with the fact that okay, the yield has been so low towards the last quarter of 2020. And from the development here, the federal government that coming from DMO has expanded the government seek attain the debt management strategy by expanding the domestic and foreign debt mix from 70 to 30% to 60 to 40% in order to create more room for external borrowings going forward. And here we see that okay, the treasury bill rate from year to date, we have the 6 months, the medium term has been the most bullish among them here, the 6 months, by gaining 1,039% in terms of year to date, the quarter to date. Then going for the bond, we have 1 year bond has been the most increasing in terms of year to date. And for our projection going forward, we have that okay, we believe that the global economy is going to increase by 5.86%, though the IMF, the World Bank, and the Fitch expect that the global economy is going to increase by 4%, 6.03%, and 6.10% respectively there. So this is because of the global economic recovery. We expect okay, there will be much of higher oil demand, more economic activity that's going to come up. Though in the last meeting, last OPEC Plus meeting, the OPEC has agreed to increase the output in May by 350 billion barrels, 350,000 barrels per day in May, and also in June it's going to increase again, and in July it's going to increase by 441,000 barrels per day in July. But for this, the increase is as a result of the economic recovery. Okay, there are more demand to that. Even despite this news, the oil price is still above $60 per barrel as we speak this morning. And for Nigeria, we say that the Q1 2021 GDP is going to expand by 1.08% and is going to be impacted by the oil and non-oil sector. The oil sector is going. This is going to be as the oil sector as a result of the Nigeria daily oil production that has increased by to average of 1.45% as against of 1.5 million barrel per day as compared to 1.28 million barrel per day in Q4 2020. So together with the increase in oil production and also the oil price increase, we believe that the oil sector is going to expand, coupled with the non-oil sector, to and also the special intervention program put in place by the government. And finally, we have the inflation, which we expect that is going to increase the upward trajectory as a result of the inflation drivers, that is the insecurity, the food inflation and the non-food inflation. The food inflation, yes, is still going to increase as a result of the increase in the insecurity rate. Though the crisis between the southern and western food traders, which happened around March, has been like being died down a little bit for now, then is going to alter a little of the food inflation. But the other one, the exchange rate, is still going to affect the non-food, non-farm items there. Then in the equity market, we expect that the opening up of business activities in Q1 2020 is going to affect positively for the listed companies on the exchange. And we can see that in the UBA results that came out recently, where they grow in their profits with about 20-something% there. And also the fixed income market, we expect that the rising rate in the fixed income market is going to slow down a little towards the end of Q2 2020, as we expect that the MPC is going to tighten the MPR in order to stop the increasing rate of the inflation. They will want the inflation to touch 20%, and based on that, they are putting various special intervention program to increase Nigeria business activities, to increase production in Nigeria. We still believe the NPR is still going to tighten up the NPR, and also the liquidity in the market and increasing borrowing, the borrowing capacity of the government, the borrowing request of the government in that from the 2021 budget is still going to affect the fixed income needs to continue to rise forward. Thank you.
Thank you very much, Banu, for that wonderful presentation. Indeed, giving us a whole bunch of interesting facts and figures. I mean, it's so alarming to see how the pandemic really affected the Nigerian economy, and I can see a lot of questions coming regarding those numbers and figures, of course, which we'll address at the end of the session. So thank you very much, sir, for that. The break flow move straight to the set speaker today, and in person of Mr. Thompson Okafor.
Good morning, everybody. My name is Thompson Okafor, the MD of GTI Securities. Just to put perspective to the presentation we have had with our head of research, we know that Nigeria is a member of the world. We are not alone in this in investments, as it were. Nigeria is only a fraction of what the whole world is having as an option for investment. And then the way we think here, we know the options that are available to investors are enormous worldwide. But the purpose of this the purpose of this presentation, this webinar, is to, in the midst of all the challenges we have as a nation, we want to try and navigate through the opportunities that are still inherent in Nigeria. Of course, top on the list is the insecurities in Nigeria. I'm sure nobody will be surprised that we have the fuel of insecurity in Nigeria when 53% of about 24-year-old people have no job, about 37% of between 25 and 34 years have no job. These are fuel for banditry, they are fuel for riots and all that, you know, and consequent upon the fact that Nigeria is not also seen to be doing what they're supposed to do to curb this increasing insecurity in Nigeria. Why are we emphasizing the insecurity in Nigeria? It's not far from the fact that the depth of Nigerian market is largely based on what we have, the foreign inflow of investment into Nigeria. What we currently have in the market as we speak is largely local domestic investors in Nigeria investing. And that's why some of the numbers are not going the way we would have expected. We have seen a number of good results coming into the market, and the pricing is not commensurate with what we see from the numbers. So we have to flog the insecurity matter, because if we are able to get that right, it will improve the investors' confidence all over the world, and then Nigeria can be the preferred choice of investment flow. Despite Nigeria being the country with the highest economy, the biggest economy as it were, insecurity has been the negative going. But in the midst of that, the light at the end of the tunnel we expect to be brought about as a result of the increasing crude oil price that is expected to improve on our rating by all the international rating agencies to be able to give us a very good landing in terms of all the excessive borrowing we have been involved in. Now, a quick one, because investment, as far as we are concerned, is about portfolio management. It's about knowing what to do as at when due. It's about being able to say this quantum of my investment will go into this sector. This is what is going, I'm going to earmark for this sector. And for this, for the purpose of this discussion, we are looking at the debt instrument, the equities instrument, and even real estate. You know, we are looking at, as we are trying to compare the opportunities available in the fixed income in terms of the treasury bill rates and potentials. We are looking at the potentials in the equities. What are we trying to achieve with the inflation rate, the MPR, at the back of our mind? You know, so the whatever investment approach every investor adopts will be to try as much as possible to outperform the inflation rate. That will explain whether our investment is giving us a positive real return or a negative one. And the purpose of this discourse is to ensure that we are trying as much as possible to beat the inflation, because we have a situation in Nigeria where the inflation rate is about 18, aggregate above 18, and then we are having our treasury below 10 at the moment. That's a lot of work for us, and this webinar has been organized to ensure that we are more informed, we are more focused in the area of investment that will give us the highest possible return, bearing in mind the current realities of the Nigerian economy. We listened to the research person telling us of the 6 top economies in Africa Nigeria is the most miserable by far, you know. But yet, in the midst of that, what can we do? And he has shown us in the past quarter to date, we have seen a couple of equities that have done some above 20, some above the inflation rate. Then the question is, how do we find out where to pitch our tents in the equities to make sure we are still beating the rate, you know? So that is our that's why we are here, and I'm sure my colleague will throw more light into it. I want to thank you all for coming, and I believe after now we'll be more informed as regards where to our investment will flow. Thank you very much.
Very much, Mr. Thompson, for that presentation. We're so delighted to, have listened to all of those details from you. So very quickly now, we'll move to a very last speaker for the day, and in person of Mr. Hassan.
Bisola. Good morning, everyone. I believe everyone can hear me.
Yes, sir, we can hear you.
Okay,
yes.
Thank you. Thank you. Let me thank my two colleagues, the MD of GTI Securities and the research analyst on those two presentations. My name is Kehinde Hassan, and I work for GTI. The tone has been set, and let me say that it is difficult to separate insecurity and investment, and by extension, inflation. Interestingly, if you check these three, you see that the first two letters are IN. So that makes the separation very difficult. The first presenter mentioned that inflation, insecurity, capital flight are rating as one of the most miserable country in Africa, and all of that. How do you invest with all these indicators? I think that is the essence of this webinar. And my colleague has set the tone that it is a difficult one, or as investment manager, we have a lot of work to do when you have inflation at 18% and MPR is around 12, TB rate less than 10, around 9%. And how do you generate returns, that will give you sufficient yield, and to surpass inflation? Yes, if you look at inflation itself, what do we need to do as a country and as an individual, to curtail the effect of inflation? As a country, we have to, or there's a need for us to be involved in active production. That is very important. Most of what we do in Nigeria today are services oriented. We need to go into actual production. I remember during the era of industrialization in Nigeria, we have this higher institution being established, to train and develop capacities, human capacity to support manufacturing, production activities in Nigeria. That was when we had it very good with the, in the country where our currency, Naira, compete or also to compete effectively against the likes of dollars and even the Great Britain pounds. We had that era when our 1 Naira, you require 2 pounds, to get 1 Naira of Nigerian currency. But we know what it is today. You will need 1,600 Naira to get 1 pound today. And that is a lot of challenge, for us as a country. So we need to involve in active production, to galvanize manufacturing activities in Nigeria. That will help to redirect the the trend of inflation rate. Insecurity is an issue. If we check from the presenter by the first presenter, the food price index was on, and for me, I don't know how it's going to be abated, because if as we speak, over 30,000 people have been killed by whether Boko Haram, the bandits, and people have been stopped from going to farm, then it's a challenge for us on how to abate this increase in food price index. You recall that in November, about 110 rice farmers were killed in Borno, and nothing was done about it. So to go to farm nowadays is very scary. No one wants to go to farm anymore. Our consumption pattern, the way we consume, we depend mostly on foreign products. In fact, that is our habit. We prefer to go for foreign products as against the locally produced ones here. So we need to change that culture. Then as an individual, now coming to investment, we need to ensure that we diversify our investment strategy. Our portfolio should be diversified to inflation. But where there is inflation, it is a hard one in terms of getting that real return, that we outperform inflation. In fact, the Nigerian case is very peculiar. So when you invest during inflation era, there is no guarantee that you're going to get a particular return. But what is guaranteed, given your knowledge and your dedication to that investment strategy, is what we call wealth preservation. At best, such investment may be inflation safe, but the returns cannot be guaranteed. Now, what do you need to do given this scenario? It is a common knowledge that in an economy where you have a double-digit inflation rate, growth is not certain. But at the same time, you cannot leave your fund idle in the bank where you will be barely paid 1% interest. It's like you're just keeping your money there for safe custody. So it means you still have to put that money into an investment. That is when the money itself has value, or that is when it will command value. So for you to invest now, it is important that you have the knowledge of asset class that you want to invest. You must understand that. And we know that as an individual, not every one of us may have such knowledge. Then that is where your investment manager, becomes relevant. And that is what GTI has been established to do. That is the kind of services that we offer. If you have the understanding of that investment asset class, then there must be, whether you as an individual or you have an investment manager that must be dedicated to that course. How? You must follow trends, every day. You must know what is happening. You must follow economic development, news, events, locally and internationally. So that dedication requires a lot of time, and that is why it is advisable to always speak to your investment manager when you are taking investment decision. That is their work, and that is what we do. So we know how to do it. So now, if you want to having these two elements at the back of your mind, if you want to invest today, what kind of instrument should you invest on? For example, we know we have in Nigerian market, we have basically the equity and the fixed income instrument. So let me take a fixed income instrument first. My advice on that will be that you should avoid investing in long-term fixed income instruments. If you recall, in 2020, when we are under lockdown, you see that some companies package commercial papers, and they were able to raise that fund at a very low rate of 5%, 4%, if you can recall. But today, those that are locked in that investment, they'll be biting their finger, because now commercial paper is now commanding 7.5% yield, even up to 8-9% now. So you need to avoid investing in a long-term fixed income. Ensure that the duration is short. Then that is fixed income. If you now look at other assets, at this time of inflation, it's good to invest in real estate. Buy the assets, most especially those ones that are distressed property. You can get them cheap. So when you do that, that is an asset class. For equity, you can invest in a growth stock. Those growth stocks are in the market because we follow the trend every day. We know the fundamentals. These are the stocks that will give you returns in form of dividend, both on interim and final dividend basis. And beyond the dividend, for whatever happens in the market or in the economy at large, they still command some level of capital appreciation. So if you combine this, you are likely to, your return that we get is likely to outperform inflation. So we have all this database, in DTI. Another investment class is to invest in commodities like gold, like food, that are consumable food, for example, even crude oil. And that is why today we have the Lagos Commodity and Future Exchange, that is coming up to create another asset class for investment purpose. We are part of that initiative, and we are very grounded, in that exchange. So the last one is to invest in dollar-denominated instruments. You have some mutual funds that are dollar-denominated. If you contact our asset management unit, we can always advise you on this. So let me try and keep to time. Let me stop here. You do have more to say. Thank you.
All right, thank you very much, Mr. Hassan, for that presentation. You have indeed done justice to that. So very quickly now, we would move to the question and answer session, and we'll take some questions. And I'd also still implore you, if you have a question, you can just drop it in the chat box so that we can address, and we'll address as many as we can. So I have a question here for the Managing Director, DTI Securities. And here is, this question says that there is an FX shortfall of about $2 billion for investors, and they want to take out these funds. What is the effect of this on the markets? Mr. Thompson, I believe that question is for you.
Should we take the question one at a time, or we take it together?
So we have there's so many questions here for different people. So I will just read out the ones that have been asked specifically for someone. So this one is specifically for you.
Okay. Is clear. Once it just speaks to what we have discussed this morning. $2 billion on its way out. It shows how shallow the market has been, and we have a lot to do to make sure by now we should be talking of investment positive FDIs for us, not negative one. So it is going to speak negative to the economy when we have if I understand the question, that the $2 billion out of this economy is going to bring a lot more pressure on the existing instruments we have at the moment. And that's why we have all said it in different ways this morning that every measure of the government must be towards increasing the foreign direct and investment into Nigeria, not just the crude alone. Because if we get every other factor in, Nigeria can be more diversified away from oil. Thank you.
All right. Thank you very much, sir. So this someone here wants to know for what sectors do we expect real growth in 2021? Mr. Bano, I believe that question is for you. What sectors we're to be expecting real growth in 2021?
Sorry, can you take that again, please?
All right. So someone here wants to know which sectors do we expect real growth in 2021?
Okay.
Okay. Thank you very much.
Right. Yeah.
The sector we are expecting the growth in the past few months in the Q1 2021, the banking stocks has actually been beaten a bit by market forces that has made them to decline. So we believe many of them, their price are relatively okay for purchase for a long-term investment, for a year investment. So we believe okay, the banking stocks are okay for now. And also we have the consumer goods. We still believe okay, many of them are still they are still okay for purchases now. Then another sector we believe is the oil sector. Because of the economic recovery, the global economic recovery, we believe okay, the positive growth in the oil price and the production we also affect the majority of the oil companies in the markets. Thank you.
All right. Thank you very much, Mr. Banu, for that. Okay, so this next question is for Mr. Hassan. And so this person says that inflation rate is already over 18%. And the person wants to know what your view is of inflation in the next quarter and the effect it's going to have in the economy.
Well, in my own opinion, I don't think inflation in the next quarter or in the next quarter is going to be abated. It's whereby we have that inflation growth rate. The major factor there is the food price index. And up till now, the issue of insecurity in Nigeria has not been resolved. We have people, the Benue State, for example, is a basket of is a food basket of the nation. People cannot go to farm in that area. There is hardly a day that you will not experience one kidney or the other in that area. People cannot go to farm anymore. So the food price index is going to be on the increase. I listened to the research analysts that said the fact that they have resolved the matter between the northern food and the southern food traders is likely to, to add to the reduction in the food inflation rate. Yes, but where the main food is, where the primary production of a food, where there's no base in that area. So inflation is still going to be up. It's going to be on the increase. Maybe now we have 18.2 or so. Maybe we should have something close to region of 20. So we need to do something faster. Thank you.
All right. Thank you very much, sir. So we'll just take some few more questions because we have quite a whole number here. So, okay, this one is for Mr. Bano. This person says that Twitter is in Ghana. So what does that say about Nigeria and our tech sector?
Please come again with the question.
Okay. So this person says Twitter is in Ghana. And what does this, say about Nigeria and our tech sector?
When I heard the news that last week, I believed, okay, Twitter said Nigeria the Nigeria population, the use of languages or some kind of the patriotism in Nigerians is the reason they choose Ghana ahead of Nigerians. So I believe it's not only because of that, the insecurity is also affected. Look at what happened to the likes of MTN, ShopRite during the NSAS pandemic. So Twitter, they won't want something like that to also affect their own investment in Nigeria. So as a result of that, of the insecurity, I believe is the reason why Twitter chose Ghana ahead of Nigeria. The safety of their investments is the most paramount to any investors. So, and to Nigeria, Nigeria needs to work actively to make it safety first. So apart from the for the safety, then the exchange rate also needs to be stabilized. If the exchange rate is well stabilized, then investors can start coming in.
Okay, thank you very much, Mr. Banu, for that. So we're actually running out of time. I think I will just take about 2 more questions for each for the remaining 2 speakers, and then for the other questions, we would get them to the appropriate speakers and have the answers emailed to the people asking the questions. So I have a question here for Mr. Hassan, and so this person says that, do you think that Nigeria is ready for the African Free Trade Zone? And also, what effect will that have going forward?
Sorry, I missed you for like 10 seconds.
Okay, so I'll take that again.
I didn't hear the question.
Do you think Nigeria is ready for the African Free Trade Zone? And what effect will it have going forward?
Well, from all indication, I would say we have the will, to be part of that initiative. But look at Nigeria of 200 million people. You see, that alone, the population size is supposed to be the strength of a nation. In fact, there's a lot of strength behind population, because with a huge population of this magnitude, you have the force of market demand behind that population. So if you look at that, and that is why Nigeria is central to all of this. The whole issue around the free continental trade is whereby we are not productive. And the fear is that if we are fully part of that initiative, it means Nigeria may become, a dumping site for foreign manufacturers of consumables. So that is why we have been, Nigeria as a nation is being skeptical about initially signing, on that agreement and things like that. But for me, I think we are ready, and I believe we should be part of it, because it will put us on our toes, such that we do the right thing that we're supposed to do, and ensure that we enjoy the reward, that's supposed to come from that initiative. Thank you.
Okay, thank you very much, sir. And so the very last question would be taken, and this is for Mr. Thompson. And so here, this person wants to know the role agriculture is going to play in the Nigerian market in 2021. Yes, so that for Mr. Thompson, what role? Okay, so I'll take the question again.
Okay.
Yeah, so the person wants to know the role agriculture will play in the Nigerian market in 2021.
Okay, thank you for the question. The role is enormous. Once we get it right in terms of our agriculture, it is expected that a lot more hands will be engaged. You have less people available for banditry and insecurity. if once we get it right in our agriculture sector, it then means that we'll have larger supply of our produce in the market, which naturally will bring down the price of our farm produce. Once our farm produce, which is currently 22.95%, comes down, you will expect that the inflation rate also will come down. Once our inflation rate comes down, the number of our investable instruments will increase. So agriculture, and that's why a lot of times, at any time there's a discussion around diversifying the Nigerian economy, there's no way agriculture will not come up in the midst of that discussion. Because once we get that right, it has a ripple effect of dragging a lot of indicators down. And the lower the benchmark, the higher you have investable instrument to play around with. So we believe strongly that as the output from the agricultural sector improves a lot, it's going to be a lot better for the market, both for the fixed income and for the equities. Thank you.
All right, thank you very much, Mr. Thompson. So for time constraint, we are unable to, take any more questions for now, although we have quite a whole number still pouring in. We would address the questions, address it to the appropriate speakers, and then the answers will be forwarded to our emails. So at this time, we would like to take about a minute wrap up from both Mr. Thompson and then Mr. Hassan. If you have one or two things that you'd like to, share to conclude the webinar. So Mr. Thompson, we can go with you.
Okay, a quick one, like we have mentioned earlier today, with all the indicators that have been projected to us this morning, we still have room for improvement. We still have avenue for investment, profitable investment. Mr. Hassan sometimes talked about preservation of wealth, and that preservation of wealth will not be achieved by keeping the money in the bank, because keeping the money in the bank will just continue to depreciate the value of the worth of the deposit we have. So GTI is here to provide us the best possible way out in terms of investment windows that is made available for us in the current Nigerian reality. So we welcome our investors on board. We are available to render the requisite guidance as we navigate through the Nigerian investment landscape. Thank you very much.
All right, thank you very much, Mr. Thompson. Mr. Hassan.
Okay, for me, I think I still to the line of the MD. It is clear that the indicators are not favorable and they are looking unfriendly. But the fact remains that we cannot afford to sit on the fence. We have to take action. If you have any money for investment and you don't take a decision, it will continue to lose value to the effect of inflation. I've posited that the inflation is going to be on the rise by the time the next figure is going to be released. But the question is, what do we have to do? Because we have to consume for us to continue to exist, and we need to spend money, and cannot open our eyes and see this in the value of this an alternative way of making money, and that is where investment that is properly guided, becomes relevant. And we are here to support everyone in doing that, in ensuring that our portfolio are properly diversified, and ensuring that the value of our wealth is preserved, with possibility of making let me not say alpha return, but making good returns. So that's my position. Thank you very much.
Thank you very much, Mr. Hassan, for that. Oh, wow, what a very interesting session it has been. And a lot has been said already. Regardless of the status of the economy, we still need to invest our funds. We still need to preserve our wealth and get value, for our money. And at GTI, we have various investment opportunities that you can actually key into to be able to achieve that. So I would like to say a very big thank you to everyone for joining in on this webinar. I would also like to mention that this webinar would be made available on our social media platforms and on YouTube for future reference. So you can go back to watch as many times as you like. And you can also follow us on our social media platforms on Instagram, Facebook, YouTube, Twitter, and we have updates that we give out every now and then to keep you updated about the economy. Thank you very much for your time, and we hope to have you sometime very soon. Do have a nice day.
Do you know that you may have unclaimed dividends and bonus shares unknown to you? Do you have investments in the stock market and you require professional portfolio realignment and management? Are all your dividends paid up to date? Are you considering merging your multiple stock accounts into one? Do you have missing share certificates that you can't account for? Do you know how to recover the shares of a late relative? Look no further. GTI is here to the rescue. With many years of experience and seasoned professionals, you are assured of getting excellent service at all times. GTI, Financial Possibilities.